Hi guys, so this is January 21st, 2021, and futures are pointing to a higher open, and a lot has happened in the last few days, as starting with new administration being sworn in, and so basically Biden and Kamala Harris are taking the White House right now, and a lot is expected from a new administration as Biden is expected to fight a virus more vigorously than President Trump, and he's supposed to sign 10 executive orders today to fight the coronavirus, and also the vaccinations rollout and new stimulus package is new bigger stimulus package is expected. So a lot of expectations, and the market likes the fact that also nothing happened during the inauguration day because after the January 6th Capitol Hill attack, people were kind of afraid that something may happen on an inauguration, but nothing happened, and there was kind of a relief rally on that. And futures are again pointing to a higher open as weekly jobless claims came in lower than expected, but still elevated at 925 million. And Janet Yellen is expected to be approved on Friday by the House as a new Treasury Secretary, and that could also lift the markets because Janet Yellen is well liked. So a lot is happening recently, but market likes the changes, and obviously is going higher. So uh, pretty good mood on Wall Street nowadays. So we'll see what happens, but in general, February is not a good month for Wall Street, so I will be careful here. Okay, so let's move on to corporate news. And before we do that, if you want to see my trades on pretty much everyday basis, you can check out and link to my Patreon club in the description of this video. And also drop me a like on this video as it helps me with YouTube algorithm. So let's start with Netflix. So Netflix shares were jumping yesterday after the company reported that sub numbers exceeded the 200 million for the first time. Revenue beat, earnings actually missed, and Netflix expect a neutral earnings this year and positive, actually neutral cash flow this year and positive cash flow next year. So and they also talked about the share buybacks, and they said that they will not need to issue more shares in the future. So the Wall Street took this very well, and shares are higher actually. But there's a huge gap, and Netflix right now is overbought. There's a huge gap between uh, like 505 and what, like 570, that eventually needed to be filled. But right now the momentum may take the stock higher. Actually, the shares are trading lower pre-market, but I actually expect this to go higher for a few days because like I said, the momentum is very strong in the stock. So I would not be selling Netflix if I was holding Netflix at this point, but I would not be buying Netflix here as well, neither. Okay, so shares of Alcoa is lower. Alcoa earning 26 cents per share versus 11 cents. Revenue also top forecast, but company added that it could see a drop in current quarter performance should conditions of its end markets not improve. So shares are dip lower on that news, but in general, I mean, Alcoa is in pretty good shape to go. Actually, to go higher and to have a pretty good business under Biden administration, because the infrastructure bill is expected from the Biden administration pretty soon. So I expect the aluminum prices to be elevated, to stay elevated for a while. So it's a good time for Alcoa. So I would be buying this on a dip, on this dip, Alcoa AA. FCEL. So FCEL reported not so good numbers and missed estimates on earnings and revenue. And I don't know, its shares were trading significantly lower pre-market, but recovered since. I mean, these stocks like FCEL and BLDP, Ballard Power Systems and Plug Power. I mean, they're so loved by investors that they don't care about the valuations. So, like FCEL missed the numbers and actually was downgraded by, I believe, JP Morgan yesterday to underweight and the price target of $10. And actually, this company will have what 70 million in revenue this year, and it's trading at a valuation at 5.4 billion. So it's insane. I mean, if somebody told me like 5 years ago that this is going to be the case, I would just laugh because I mean they're not growing that much, but people just love these companies and they expect these companies to perform, and they don't care about valuations. So just throw money in there. But eventually, that doesn't usually doesn't end up well. So I would be very careful with these stocks because, first of all, I mean they're very high to me. I mean, they're insanely high to me, like FCEL and Plug. Like Plug is not looking good on the chart, and neither does Ballard System. I mean, they go in tandem, basically. They go together, and if one goes, the other goes. The charts are pretty much identical for both, for all of them, and especially Ballard and Plug, and FCEL a little bit different, but still very close. So these hydrogen renewable energy companies are very hot, but I would be extremely careful because valuations are insane, pretty much to me. Okay, so next company is Tesla. Speaking of valuations, but Tesla shares are higher, and it reported that it saw fourth quarter registration jump by nearly 63% during quarter, thanks to sales of its Model Y crossover, and California is Tesla's largest market. So Tesla shares are higher, but again, they're not looking good because I mean they're looking to me like they're about to drop. So I would be again careful with Tesla shares, and I'm more optimistic about the solar companies like CSIQ and SPDR. Okay, so these companies can really benefit from the new Biden administration because of the new laws and new incentives that Biden can throw at this company. So, but EV companies look pretty stretched to me, so I would be very careful with that, starting with Tesla. Okay, UAL. So shares of UAL United reported yesterday, and they're trading lower because they reported lower than expected earnings and the revenue, but said that it expects to cut 2 billion in annual costs through 2023. But in general, the airlines are in a pretty much sweet spot, and my favorite one is LUV, and they're looking pretty good because because of the new administration, because of the new stimulus package that may be issued. And I mean, the shares of airlines trading lower on this report, but maybe it's a good time to pick them up. So LUV and AAL, I think they're not a bad time to pick up the airlines. Okay, and we're expecting earnings from Intel. And Intel shares are higher pre-market a little bit, and they're supposed to report after the hours, after the bell today. And as you know, that Intel is changing its CEO, and shares ran up a lot into this report. So I would be very careful with this stock because this may drop on a turn on a dime. Okay, the shares are looking overbought, and I don't know what to expect or what they're gonna report, but in general, I would not be buying before this report. Intel, I would rather be buying AMD, and AMD shares are a little bit higher, but still off the highs for the past few days because investors who were investing in AMD flocked to Intel after the new CEO announcement at Intel. But I would be actually buying AMD shares rather than Intel, and also like Nvidia out of chip stocks. Nvidia's trading pretty much flat this morning, but it had a good run up in the past couple of days, and actually like CRM, which is not obviously a chip stock, but it's in pretty good position and to go higher in this year. Okay, so I would be interested in this in these companies, and also IBM is supposed to report, and IBM shares are a little bit higher, but in general, I expect a pretty good report on cloud computing, and I think that IBM shares are in pretty good position to go actually higher after this report. So I'm a little bit bearish on Intel report, and I am bullish on IBM report. So, but in general, I would buy AMD and Nvidia and CRM. Okay, that's it, guys. Don't forget to subscribe to my channel, click the like button, and I'll see you Monday.